Kenya is set to receive $390 million, an equivalent of 50.3 billion shillings from the World Bank in the next 3 years to upgrade its digital infrastructure. The funds will be used for broadband expansion so as to attract new capital into the country's technology ecosystem. According to Tim Kelly, the lead digital specialist of the World Bank in Nairobi, the funding under the Kenya Digital Economy Acceleration Project will support the adoption of the open fibre data standard and the development of a secure shared fibre infrastructure database. Jimmy Mbogo reports.
The $390 million World Bank credit facility to Kenya was approved in March of 2023. But has been slow to take off, with only 6% of the funds being disbursed. Tim Kelly, the lead digital specialist of the World Bank in Nairobi, notes that the bank intends to disburse the rest of the funds before the 2028 deadline to accelerate the country's digital infrastructure.
Here today we're talking in particular about the infrastructure component of the project, which is just over $200 million, and it involves investing around $100 million to create an additional 27,000 kilometres of fibre in Kenya's backbone network. In addition, we'll be committing a further $65 million to last-mile connectivity for Kenya, providing internet access for schools, for hospitals, police stations, and for the government services as a whole.
The Communication Authority of Kenya has engaged stakeholders to address challenges hindering the adoption of a shared database for Kenya's fibre infrastructure, with the hope to address the gaps in terrestrial fibre mapping. Communication Authority Director General David Mugonyi says the adoption of open fibre data standards will reduce deployment costs, enhance network resilience, improve coordination with road, rail and energy agencies, and boost investor confidence in the sector.
Terrestrial fibre networks essential to our national broadband system remain largely undocumented and inconsistently reported across operators, hampering informed decision-making by multiple stakeholders. Investment decisions, including those under the Universal Service Fund and the Digital Superhighway, have at times advanced without knowledge of existing infrastructure, resulting in unnecessary duplication of routes, inefficient allocation of capital, preventive damage during construction, and other activities.
Stakeholders have called for streamlining of wayleave fees and other charges as well as licenses. They say lack of a standard rate has forced some investors to set up shop elsewhere, denying Kenya the revenue and opportunities. Jimmy Mbogo, Citizen TV.